So good afternoon, welcome everybody. Thank you for being with us today in this wonderful day, fall day. Love it, the weather. We have today Alison Chavert with us, and she's going to be talking about government benefits 101. But before we start our presentation of today, we are going to talk a little bit about Partner Resource Network. My name is Veronica Alvarez, and I'm the Regional 13 Coordinator for Partner Resource Network. So Partner Resource Network is a parent training and information centers for Texas. We are funded by the Department of Education, Office of Special Education, to provide free resources and training for parents of children with disabilities and self-advocate. Our mission is to empower and support Texas families and individuals impacted by disabilities or special healthcare needs. We serve parents of children with disability and youth with disabilities from the ages from 0 to 26. We have now 4 projects serving parents in Texas. We have the PAT project, the TEAM project, PEN project, and PACT project. I'm part of the TEAM project in the red area, so I'm in Austin, and I help parents here in Austin and surrounding areas. But another region that is part of the TEAM project is Region 20, that is San Antonio, the San Antonio area. And then we have Region 1, that is the Rio Grande Valley area. But if you are from another part of Texas and you don't know your regional coordinator, you just can send me an email, or I'll put it there in the chat and I can share that information with you. Which are you coordinator near you? Our services are free, and we provide parent workshops, youth workshops, webinars like this one, information and referrals, one-on-one technical assistance. We do a lot of support in the ARD meetings or prepare you for the IEP paperwork. We have this once a year a symposium. Each coordinator, the 20 coordinators that we have serving parents, we do once a year a symposium when we invite a lot of speakers to talk about disabilities and important topics around that. We also offer parent leadership training, youth leadership trainings. So for today, your camera is off, your microphone is off. But if you have any question, please don't hesitate and use the chat box. Type your questions in the chat box or in the Q&A. And I will be monitoring that questions, and Allison is going to be answer those questions for you. So this webinar is being recorded, and later today we are going to share with you guys a YouTube link that Consolidated Planning Group have for YouTube, and we can share that link later today with you guys. We also post a lot of our videos in our Facebook pages or Partner Resource Network. We have also those videos in there. So at the end of this session, you are going to receive a evaluation link, very automatic, via Zoom. Please take like 1 minute, 2 minutes to fill that evaluation for today's webinar. They help us a lot. That's the way that we report to our grant, and we can continue to provide free resources for you guys. For today, we do not provide CEUs, but if you need a certificate of attendance, just type it in the chat box, email me, and I can do one for you. I can give you a certificate of attendance. Again, my name is Veronica Alvarez, and you can see my phone number, my new email, and our webpage, www.prntexas.org. Also in the chat box is our contact information. Allison and mine is in the chat box if you need our information. So I'm going to start sharing this. And once again, we have with us Alison Chavert. She's a passionate advocate and a leader for the special needs community. She's also a licensed financial planner, with over 25 years of experience working with families with special needs. So she also is a parent of children with disabilities, so she has a lot of knowledge, and she's here with us again. Thank you, Allison, and she's going to be talking government benefits one-on-one.
Thanks so much, Veronica. It is a pleasure to be back with you again today. So, yeah, as she said, I am a mom. So I guess I'm a mom first, right, with kids with disabilities. And so we put out a lot of webinars on a regular basis. If you've attended any of our webinars before, we're glad you're back. If you're here for the first time, we're glad you're here, and you can look for future content on things that might be relevant to you in your planning journey. So today, we're going to be talking about Government Benefits 101. The method behind our madness and why we do all of these webinars is we want to empower you. We want to educate you. We want to put the tools in your hands so you can be successful as you're navigating this journey with your own family member, because it is tough. So if you're feeling overwhelmed, if you're feeling like I don't know what I don't know, you're not alone. We hear that every single day. We hear that. So we're glad you're here, and I hope that you guys will take I always say 1 to 3 nuggets. In an hour-long presentation, we are going to be done by 1 for anybody that's counting. But if you can take 1 to 3 nuggets that you can implement in your journey, then this webinar is a success. So I hope that for you today. Okay. So a little bit more about us. Consolidated Planning Group, we've been around for a long time. We're based in Sugar Land. We serve families all across the state of Texas, as well as all across the U.S. We have over 28 years of experience, insurance and financial services, MDRT, core to the table. And we're fully licensed in insurance and securities. We're also a national Social Security certificate holder, as well as members of the Academy of Special Needs Planners. We are an advisory and consulting firm, and we predominantly serve families with special needs family members, as well as the agencies, professionals, and physicians who serve them. There's a difference when it comes to a financial advisor and a special needs planner. And a lot of times there's a lot of confusion and overlap of what is it that we do, what does a special needs attorney do, what does the financial advisor do. And so as it relates to a financial advisor, we do have a lot of similar licenses as far as securities licenses and things like that. But when it comes to special needs planning, your situation is specialized. It is very, very important that you understand the rules surrounding the Social Security Administration and all things as far as government benefits are concerned. It's important that you have money in the right baskets or the right buckets, so that way you don't cause your child to disqualify for benefits or not qualify for benefits. A lot of times we get calls on a really regular basis about special needs trust and about guardianship. And so a special needs planner works very closely with the special needs attorney. The special needs attorney is the legal documents. They're the paper, they're the guardianship, they're the special needs trust. They draw those documents, and those documents are going to be very important in your journey, but they don't do the financial side. So look at a special needs planner as the money and a special needs attorney as the paper, okay? All right, so one of the things that we talk about on a very, very regular basis is how will your child's care be funded? And while clearly government benefits are not going to be the single source of funding for your loved one, it is a relevant source, and it's important that you understand what is out there and what might be available to your child or to your adult child. So we were talking about the buckets and the baskets a little while ago, and having money in those right buckets to preserve your eligibility for state and federally funded programs. SSI and Medicaid is a means-based test, okay? Then we've got Ssdi or Rsdi and Medicare. Ssdi stands for Social Security Disability. And I want to spend a little bit of time on this just for a second because there is a lot of confusion. It's confusing that our children may have a disability and Social Security disability is not what they qualify for. Typically, they're qualifying for SSI prior to your retirement, prior to your own disability, those types of things. So I want you to, if you're taking notes, to really understand the difference between SSI and Medicaid and Ssdi and Medicare, because it's kind of two different sides of the house of the Social Security Administration. So SSI, Medicaid means tested. So this is for the indigent, okay? Indigent and disabled. So what they're going to be looking at for qualifications is a qualifying disability, number one. Number two, they're looking at assets. How much assets do you have in your name, or if your child is over 18 in their name, okay? So if a person is single, you can't have any more than $2,000 assets in your name, one car, one house. Any additional assets above and beyond the $2,000 would have to be in an ABLE account or a special needs trust, or your child simply will not qualify for SSI and Medicaid, okay? If you're married, the means-based test is $3,000. Again, one car and one house. Now, sometimes people put a little challenge out there. Well, I have two cars and we get this. There are some, and you can kind of Google this on the Social Security Administration website. There are some provisions to have two cars if the second car is super, super old or it's financed to the hilt, or if you plan to sell that car in the event of a death to pay for final expenses, there are some, provisions for a second car. Okay, so oftentimes, even though your child is disabled, if your child is under 18, oftentimes what we see is families do not qualify for SSI and Medicaid because it's based off of the parent's assets, not the child's. Prior to the child turning 18, it's based off of the parent's assets. This takes a change whenever when your child turns 18, then it's based off of the child's assets, not yours. Even if they still live in your home, even if you still claim them on your taxes, etc. That magic age is 18. So if you've been denied before, it's probably, unless you have assets lower than the amount that I have on the screen here, it's probably not necessary to continue reapplying with SSI or appealing the decision until your child turns 18. As far as Ssdi and Rsdi and Medicare, it's based off of a work record and taxes paid into the Social Security system. So if you've looked at your Social Security statement lately, you have working quarters. As we work, we earn working quarters towards the 40 quarters that the Social Security Administration looks at. So most of our kids don't qualify initially for Ssdi because they don't have a work record. So if you haven't paid into the system, this is also true for an adult with a disability. So if you're married and you have a disabled spouse, it's possible that they could have applied for Ssdi and been denied. And the reason they would have been denied in that example, given that the disability was a legitimate disability, would have been that they didn't have enough credits into the work record to qualify for that. Do we have some questions, Veronica?
Before you move, Allison, they asking what is Rsdi again? They missed that information.
Yes, Rsdi is Retirement Survivors Disability Income. So, and we're going to talk a lot more about that in a little bit because this is an important factor. Rsdi comes if a parent dies, if a parent is disabled under the Social Security Administration and they have minor children regardless of disability, or if a parent is retired and we have a disabled adult child. So we're going to talk a little bit more about that. When you're approved for SSI, Medicaid gets approved. Ssdi, Rsdi, Medicare, you're eligible for Medicare after 2 years. So once you're approved for Ssdi or Rsdi, Medicare comes after 2 years. Now, it is possible plausible, and it happens all the time, where your kids may be dual qualified. They qualify for SSI and Medicaid, and they qualify for Ssdi, Rsdi, and Medicare. So we'll talk more about that as well. Okay, so when should you apply, and what do you need to apply for? So for your child, for it to be based off of their assets, not yours, you're going to want to apply for SSI the month of your child's 18th birthday, and it should be scheduled a few months in advance. The Social Security Administration, their offices are still closed to the general public. They have been for going on 2 years. They are scheduling phone appointments. The phone appointments at many of the locations across the state are behind. And if you call today, it might be months before you actually get your phone appointment, okay? There is, you can apply online for SSI and Medicaid, and you can follow all the steps and kind of go through that process that way, and then an appointment will be set. Historically, prior to the pandemic, I liked the idea of either going into the Social Security Administration with an appointment or having a phone appointment to do your application, because they seem to be processed a little bit faster. You're going to want to have evidence that demonstrates that the child's disability began prior to age 22 to qualify for childhood disability benefits under one parent's record, okay? So we'll talk a little bit more about this in a moment. But the main thing, if you're taking notes, it is important to be able to establish that the child's disability began prior to age 22 to qualify for childhood disability benefits under a parent's record. Now, if your child's disability started prior to age 22, but you didn't know what I just told you, and they're older than 22 now, can you still apply, and could they still be considered under a parent's record? And the answer is yes. You just have to be able to demonstrate this. So if you miss the deadline, you're still good. You just have to be able to demonstrate that. We're going to want you to gather all the medical history, the physician's name, all of the physician's name, address, phone number, diagnosis history, medications. And this might be a little helicopter, but I suggest chatting with the PCP first and reviewing their records. And the conversation goes like this. I'm getting ready to apply for SSI and Medicaid for my child, and they're going to be getting your medical records. And I know you get requests like this all the time. I would like you to send me what you would send on behalf of my child. I would just like to review it ahead of time. And this can save you some headache, because sometimes medical records are wrong. A lot of facilities have gone to digital medical records. This is where you really want a clear picture of what the disability is, what the limitations are, the medications, the history. You just want it to be clear, and you don't want mistakes. The mistakes in the record or an omission in the record could be the reason you get denied. So it's very important I think it's very important to do this step. And I think that it makes the process go a little bit faster. What questions do we have, Veronica?
We have several questions. Some of them they already answered, but one parent says, I didn't file when my son turned 18. Now he's 21. Can I still file? So
absolutely.
Yes, right?
You can file at any time, and we'll kind of talk about some other things to keep in mind when filing.
Do you have the website in which one you can apply for SSI? And another one, I assume the psychiatrist record are okay, correct? There's two questions.
I assume that it's what?
I assume the psychiatrist records are okay?
Yes. Yes, any of the records. You know, some people have mental health challenges. It could be anything. If your child has cardiac issues, then you want the cardiologist. If it's a neurologist, the psychiatrist. They're going to get the PCP records, but they're also, if there is a diagnosed condition that is seen by another specialist, they're going to want to see those records too. So that is good. And the website is ssa.gov. It's the main website for the Social Security Administration. Also, for those of you that maybe haven't noticed that I don't know, about the last 10 years, the Social Security statements haven't been coming in the mail. You can create a username and password on the ssa.gov website, and you can download your Social Security statement and your work record, and you should do this. This is important, and this is relevant to your journey for benefits for your child. So ssa.gov, you can create a username and password and download you, and your spouse can do this as well, each of your Social Security statements. Really, really important to do this. Any additional questions?
I just answered, what is the PCP? Is primary care physician, right?
Yes, primary care physician. Good question. Okay. So one of the things I also suggest you do as a parent is check out the Social Security Blue Book. And if you Google the Social Security Blue Book, it's going to take you to this website. The Blue Book is basically an impairment guide that the Social Security Administration uses to determine what constitutes a disability, okay? And they have it categorized by, I don't know, by function. It could be like neurological, cardiac, it could be psychological. There's movement disorders. There's so many different things out there. But the impairment guide is something that I suggest that you look at and think about, what are all the diagnoses that your child has or that you have, whatever. And what are you going to have to prove that disability? And so I would look at the Blue Book first before getting the PCP records. And when you're reviewing your records, your medical records that they would send to the Social Security Administration, ask yourself, can I prove what the book says I'm going to have to prove? If I'm reading this record, I'm picking up this record for the first time, am I able to, kind of glean from the record that they have the inability to do whatever the impairment guide says they're going to have to do, to prove disability? So that is good advice. And I would look up all of the disabilities. If there's multiple disabilities, it only takes one to qualify for disability, but it could be, be lumped all together because they qualify in multiple categories. So that is, true as well.
So another parent is asking, what is the difference between the Blue Book and the Red Book?
Yes, we're going to talk about the Red Book in a moment. The Blue Book is an impairment guide that is going to talk to you just about the impairments and what you have to prove, what Social Security is looking for to prove disability. And the Red Book is an extensive book about working and earning money while on benefits and what to do and what not to do, and trial work periods. It just basically talks about, so if you have a child that's in vocational rehab or summer earn and learn or things like that, it's going to be talking about earning money and how to maintain your benefits and kind of what they're looking at for that. So with the Social Security Administration, there is some presumptive disability conditions. One that we see a lot, that sticks out a lot, is Down syndrome. So that is a presumptive condition that is, basically going to be preliminarily approved right off the bat. When you start this process, I say put your patient's hat on, get your favorite beverage, coffee, wine, whatever it is, and be very patient, because this is not a fast process. You can fully expect before your case is approved that it could take 3 to 5 months. I hate to say 5 months. I have seen it take that long. And generally the expectation should be, 12 weeks. You should expect it. And if it comes any sooner than that, then you did good. So do plan on that. So some of the other things: total blindness, total deafness, bed confinement, stroke more than 3 months in the past, and continued marked difficulty as a result of that stroke, cerebral palsy, muscular dystrophy, and then, of course, intellectual disability, also known as IDD, or with an IQ of 70 or below. So these are some of the presumptive conditions here.
We have a question, Allison. Will my child need to reapply for disability when she transitions into adulthood?
So that is a great question, and thank you for asking that. When if your child is already getting SSI and Medicaid, they're under age 18, you do need to reapply or do a reevaluation, so that way they can switch over to benefits under a parent's record and can establish that their disability started prior to age 22. So if you have a child that is under 18, that is turning 18, and they're already getting SSI and Medicaid, you will want to call and schedule your appointment with your local Social Security, not the national number, your local Social Security office for the month that they turn 18. It does not have to be after their actual birthday. You can schedule it for the month that they turn 18. But again, I can't stress enough that they're backed up. So if you call today, it could be 3 months. In fact, I had somebody that told me yesterday in the San Antonio area that they called to get an appointment, and they simply told her that they had no appointments, and the best they could do is tell her to call back at the beginning of the week. So it just depends on where your local offices are. More remote areas may have a little bit more, availability than some of the bigger hubs like Houston, Austin, San Antonio, etc., Dallas. So a presumptive disability, some of those presumptive conditions that I was talking about, they can approve your case preliminarily based off of the disability if you have one of those 15 conditions. And so prior to the determination, the final determination being made, they might turn on benefits. So, we've definitely seen this again with Down syndrome, some of those other conditions that we mentioned. If there is a likelihood that it'll be approved, they can make a presumptive decision. We have an additional question?
Yes, we have a question about the IQ. You mentioned, another parent says, you said 70 or below. I was told at Harris Center in Houston that it has to be 69 or below in Texas, which is correct. My daughter tested at 70.
So everything that I've read is 70 and below. All of the waivers in Texas are 70 and below or 75 and below with multiple disabilities. So I can't speak for what, others say, and I don't know where that is coming from, but in general, and most of the attorneys, like as far as the attorneys are concerned for special needs, when they're thinking about guardianship, power of attorney, healthcare power of attorney, which this presentation is not about, but most of the attorneys' thresholds is 70 and below. And basically what they're saying is that, they have to have a child, if a child is going, an 18-year-old is going to sign a power of attorney or a healthcare power of attorney, they have to have capacity to understand what they are signing. So I do know that 70 and below is a typical threshold for that. So I would just say ask again.
She also mentioned that she has epilepsy. Would that qualify as another disability? Epilepsy.
Yes. Yes. Any of those diagnoses that a person has on top of intellectual disabilities. We've seen multiple disabilities with autism spectrum kids, with Down syndrome kids. I mean, we see a lot of a psychological disorder could also be a disability. So a lot of times, unfortunately, with our kids with disabilities, if there's one, there's a lot of comorbid conditions. So we definitely see that, and all of those will be considered. Okay, so here's what you need to know. This is where it starts getting confusing. When a parent retires or becomes disabled or passes away. So when a parent applies to receive their own Social Security benefits through retirement or disability, the disabled adult child, formerly called DAC, so you may have heard that term before, DAC, D-A-C. Social Security Administration has used this term for like 30 or 40 years. They've moved away from it. They're now calling it childhood disability benefits, but it was formerly called disabled adult child. So basically, if your child, again, the disability began prior to age 22, when a parent is either on their own Social Security disability or Social Security retirement, that disabled adult child is entitled to receive half of the parent's benefit, which for them is now called childhood disability benefits, and it also applies to minor children that are not disabled. So we have mom or dad becomes disabled or retires with minor children, the minor children are, entitled to half. And then that half continues for the disabled adult child even after they turn 18. So once the kids without disabilities turn 18, it goes away. But the kid that qualifies for childhood disability benefits, that benefit will continue. So 24 months after receiving Title II benefits, the DAC will be eligible for Medicare. So this is that Social Security, this is the Ssdi, Rsdi, and Medicare that we were talking about a little while ago. When a parent passes away, the disabled adult child is entitled to receive 75% of the deceased parent's Social Security for as long as the child remains alive and disabled. They will continue to receive 75% of the deceased parent's Social Security record. So this is basically saying that your disabled child is going to get to piggyback off of one of the parents' records because they're not going to be able to work and earn and pay into that system that we were talking about. So this is a really wonderful benefit to a lot of families. So a lot of times what happens, so right now, the amount, and I'm switching gears on you and I apologize for that, the amount for SSI, the means-based program, right now it's $794 a month. However, for 2022, they had a 5.94% increase, and the benefit for 2022 is going to be $841 per month. This is for SSI. When a parent retires or goes on disability, it is possible that the child just simply switches over to Rsdi, and so they're going to get the higher benefit. It just depends on if they have over $800. So for example, I don't want to confuse things. Let's just say the parent's Social Security benefit is $3,000. So in this example, the child would be entitled to $1,500. The $1,500 is more than the $800, and there's $800 and some change. So the child would switch over to Rsdi. They would maintain their Medicaid qualification, and then after 2 years, they will be eligible for Medicare. If the parent's record is less, so the 50% would be less than $800, they would still be getting the SSI. So sometimes, and it's not all the time, it's possible that a child or your loved one would be getting some SSI, some Ssdi, because some of our kids went to work, they went through VR or Summer Earn and Learn or pre-ETS or whatever, and sometimes even Rsdi. So they could be getting benefits from each one, and they don't stack like it's going to be more and more and more. They true it up to the total amount, right? So sometimes people will flip over to Rsdi, and that'll be all that they're getting in Medicaid and Medicare. Sometimes it's SSI. It's going to be SSI only, SSI and Medicaid, unless the child works and qualifies for disability benefits under their own record or until that parent retires. So here's where it gets a little bit confusing. There are family maximums. The last I checked, it was up to 188% of the parent's record for the total household. So if there is a non-working spouse that's also drawing benefits from their spouse record, this household maximum, you're probably going to hit this household maximum. So the math isn't always perfect of the 50% and the 75% when it's coming to that household maximum. I should say here, the reason of downloading your Social Security statements that I mentioned a moment ago, as a Social Security advisor, we have specialized software that we can plug in. We plug in all of those working years for mom and dad, okay? We plug in all of the details from the Social Security statement, and it actually tells us exactly how and when you should claim and how to maximize the benefits and what those benefits are going to look like. So we are able to completely do a complete Social Security analysis for you. So if you're on that brink, you're thinking of retirement, retirement somewhere in the horizon, and you're kind of thinking through these things as you're planning for the future, the financial future for your loved one, that's probably a really, really smart activity to do. I think we have some questions.
We have questions, some of them you already probably answered them. Like, if there are two children with autism in the family, does the SSI and Medicaid assess and requirements double?
I'm not sure I understood that. Could you repeat that question, please?
All right, I will repeat it, but it's confusing the question. If there are two children with autism in the family, does the SSI and Medicaid assess and requirements double? I also don't understand the question. So probably we have two people receiving money from the SSI, the thing that you are saying about the household and stuff.
Okay, yes, I've got this. Okay, thank you for posting that question. I see it. If there are two children with autism in the family, does the SSI and Medicaid asset and requirements double? No, that is a great question. And actually, in all the webinars I've ever done, I've never had somebody ask me that question. That's a great question. So for SSI and Medicaid, if you have two disabled children and you're a married couple, could you have $6,000 in assets instead of $3? And the answer is no. No. So that is a good question. Now, in that same example, let's talk about this a little bit further, because I see families all the time that have more than one child with a disability. I have that. Those family maximums definitely matter. Like when the children turn 18 and they qualify as a disabled adult child. So in that example of that $3,000, if the parent's record is $3,000, then ideally, the 50%, is easy math, is $1,500. But if you have two children, then that $1,500 would be split amongst the two children. If you have a spouse that didn't work, that would be drawing off of a spouse's record, because there is a such thing as this. This is where it starts getting complicated, and we can help you with all of this. But if you've been married for more than 10 years, we have a lot of families that have they have a caregiver. Mom or dad stays home and is a caregiver for their special needs kids. And in that regard, the parent that stays home would essentially draw off of the Social Security record of the working parent, right? The working spouse. And so it would be split even further. So it is complicated, but if you've got two children with disabilities, or if you're a spouse or have a spouse that has stayed home that would be drawing off of your record, you definitely need to go through the Social Security analysis for sure. Okay, next question.
Yes, my son has autism. He's going to turn 17 on January, currently on Ssdi. How I find out his IQ to decide between guardianship or parent or attorney when he turns 18?
So there are a lot of services that do testing, and one of them is your local intellectual disability authority. It's by county, and if you say what county you're in, I might be able to help with that. But you can go to your local intellectual disability authority. For Houston, it's the Harris Center. For Fort Bend County, where my office is, it's Texana. So each of them have, so there is a local authority. They do testing and they can determine the level of need. That is one area. You can do private testing. Sometimes the schools do testing. I would say less schools do testing on that side of the house. But also, if your child is working with vocational rehab, Texas Workforce Solutions, Texas Workforce Commission, PREET, Summer Earn and Learn, they're putting an employment plan together, and part of that employment plan includes testing. I commonly, now not every case, it's because it's very individualized to the individual's needs and what they need to assess. But commonly what we see they assess is they do a neuropsych test, and that's $3,500 to $5,000 if you're paying that out of pocket. And they also commonly do a vocational evaluation as well. And those tests that I'm speaking about are covered by those programs, and it doesn't end up being out of pocket cost to you. So those are some areas. Also, your local children's hospital, some of your psychologists, your psychiatrists, if you want to private pay or pay for these. A lot of insurance is not going to cover this. Sometimes if you have really fantastic insurance, it will. I've been blessed with fantastic insurance, but most of the time your health insurance is probably not going to cover these. But the things that I mentioned, your local authority, possibly the school, and vocational rehab, those are all areas that you might be able to get that testing done, and it might be covered.
Local mental authority here in Austin, we have Integral Care, Blue Bonnet Trails, but we have, you put just your zip code. We have, I'm going to put in the chat a link that you put your zip code or the city, and they tell you where is the local mental authority, because we are seeing several parents asking San Patricio County, Brazoria. So with that, you can find out where is the one close to you, right?
Wonderful. I didn't have that handy, but that's the one I use all the time to look it up. So you're going to put that in the chat box. And so basically what she's putting in the chat box, you can put your zip code in, and it's going to tell you who your local authority is for that. So perfect. Someone asked about life insurance. How does life insurance affect benefits? And that's a great question, and most people never ask that. Basically, if you have term life insurance, it's not going to affect the benefits. But if you have life insurance that has cash value in it, like whole life or universal life that has cash value, that is going to be counted as an asset. That cash value in those policies will be counted as an asset. So some of the workarounds on this. So say, for instance, that you bought a permanent life insurance policy on your child when they were young. They're uninsurable now. You certainly don't want to let this go. As soon as they turn 18, make yourself the owner of the policy, okay? Because then the asset won't be counted against the child. So it's a change of ownership form that you can do with a carrier. It doesn't cost any money. Then you're the owner, not the child, right? You can keep the life insurance and not let it go. Permanent life insurance is golden for our kids with disabilities that may never get insurance again. You don't necessarily want to let that go. Term insurance is not going to be counted against you because there's no cash value with term insurance. Okay, so we have another question about, does it work the same way if a parent receives teacher retirement? So no, it doesn't work exactly the same because there is an offset. It depends on what district in the state of Texas that you're working in and whether you pay into Social Security or not. Most districts do not pay into Social Security. I know, like Alamo Heights and San Antonio, they do. I mean, there's some different districts across the state of Texas that actually, I think Austin may actually pay into the Social Security Administration. So our software is going to calculate those offsets for government workers and teachers. So for the sake of time, I'm going to move on, and then we'll take some more questions at the end. So Title II programs, we're talking about the Social Security retirement benefits. We're talking about Rsdi, retirement survivors and disability insurance, Ssdi, Social Security disability insurance. I kept this on here because the DAC, like I said, it's an old term. They've used it for 40 years and they stopped using it in the last 12 months. But people that have been at the Social Security Administration for 20 or 30 years, and like all of us, it's hard to stop using a term they've used forever. So if you hear that, DAC, disabled adult child, then we have the DWB, disabled widower benefits, and an adult receiving Title II benefits is a beneficiary. Okay, so to be entitled to Ssdi, the Social Security Disability Insurance, you're going to want to file an application. You're going to want to be found medically disabled. You're going to want to be fully insured, is insured for disability status, is not working, or working, but the countable earned income is less than the substantial gainful amount, which is $1,310 gross per month. Okay, so Ssdi, you can be working when you file for Social Security disability benefits, but if your earnings are more than $1,310 gross per month, you're earning more than the substantial gainful amount, and you will be denied. Furthermore, that amount is $1,350 for 2022. So if you're taking notes, the substantial gainful amount for 2022 is $1,350. So to be entitled for Rsdi, the Retirement Survivor Disability Insurance, is 18 years of age or older. The disability began prior to age 22, is the dependent of an insured worker parent, is not married, and has not previously performed substantial gainful activity of the $1,310 per month, or whatever that substantial gainful activity is for that year. And I should further note here that the caveat to this is that if a parent dies, goes on benefits, or is disabled and they have minor children, then minor children will be covered for this. Minor children without disabilities. Just want to repeat what I had said on that before. Okay, the Red Book. So the Red Book serves as just a general reference guide, and it's not general and it's not light reading. It is heavy reading. It is confusing, and you got to really sit down when you can take some time to focus on this. But this is going to talk about the different programs out there for working earnings while getting benefits, okay? And what you have to know, write this down. There are different requirements for SSI and what you can earn while working with SSI and what you can earn getting Ssdi or Rsdi. They're completely different. So if you have a child or you or a loved one is dual qualified for SSI and Ssdi, you got to follow both requirements. So the requirements are less for SSI, they're more for Ssdi, but if you got both, then you got to follow both. We can help go deeper and wider with you on that and any questions, but this is a big source of confusion for many, many people. Okay, so what we want to make sure is that you have your money in the right buckets, you have your kids' money in the right buckets, the first step. So first things first thing I want to tell you, there's no such thing as hiding money from the Social Security Administration, okay? So basically what you want to do is you want to make sure, so if you have kids that are transitioning, and what I mean by that is going to be turning 18 soon, you want to make sure that they don't have more than $2,000 in their name. You definitely want to make sure of that. So what can you do? Can you just move the money? Can you just close the account? You can spend the money on needs for the child. Maybe they need a car. Maybe they need a new iPhone or a computer for their online learning. Maybe they have therapy 3 days a week that you're paying out of pocket for. All of those expenses can be documented. So that's an easy thing. Another thing is that you can have money in an ABLE account. We do entire presentations on special needs trust, ABLE accounts, guardianship, all of those types of things. So we do all of those things, but the special needs trust and the ABLE account is basically the only place a person can have money above and beyond those means-based tested, that $2,000 or $3,000, to not disqualify for benefits. So main thing that you need to know is, as we're planning for kids that may have care needs for the rest of their life, not just our life, we need to make sure that we don't set our kids up as beneficiaries on any life insurance, investment accounts, 401ks, 403bs, tax sheltered annuities, any kind of financial instrument. Do not name your child directly as a beneficiary. And if you've done this, it's no big deal. Call the carrier, call the company, get the change of beneficiary form and update it. It doesn't cost you anything to do that. Because if something happens and we leave large sums of money to our loved ones in their name directly, as opposed to leaving it to a special needs trust, it's going to cause them to disqualify for SSI and Medicaid. We also want you to ensure that well-meaning family members don't leave assets to your loved one. Grandma and grandpa love their grandkids. Grandma and grandpa have saved a lot of money over the years. They've amassed a lot of money. They want to help. So the right way to go about doing this is to leave money to your special needs child to the third-party special needs trust for the benefit of little Johnny, for instance, not to Johnny directly, okay? So if somebody screws up and this happens, it's just an accident, okay, how do you fix it? Basically, you're going to have to hire an attorney, and the attorney is going to advocate on your behalf in front of the judge to get that money put into a first-party special needs trust. First-party special needs trust has a Medicaid payback. A third-party special needs trust does not. So the smarter thing to do is to set it up the right way and leave it to a third-party special needs trust, okay? And it's also cheaper, and you don't have to do it on the back end, okay? So there is a workaround on that, but until that workaround happens, your child will lose their benefits. Okay, so is there money in the right buckets? We've talked about special needs trust. We've talked about ABLE accounts. These are all things that can be established. We can help you establish an ABLE account. Life insurance and other assets is typically what we see families fund a special needs trust with. Most families are going to spend 25 to 35 years in retirement, so they probably need the money that they've saved up over their 25 to 40 years of working for their own retirement. So then how do we fund care for our loved ones? We're able to determine what the future care costs will be for your loved ones, so that way you can plan accordingly. And some people have those assets already from inheritance, from other savings and things like that. But oftentimes, again, people plan to fund their special needs trust through life insurance proceeds left to the trust. Okay, as far as ABLE accounts, we're going to just kind of talk very briefly on an ABLE account. It's organized under the Act of 529A. It came out, I believe, 2014. So we've heard of 529C. C is for college. 529C is for college. A is for ABLE. So the 529A, the beneficiary is the account owner. So that is different from a 529C. Income earned in the account is not taxable and contributions are not deductible, but it does not jeopardize SSI and Medicaid or other public benefits. You can only put $15,000 a year into an ABLE account if the individual is working, the individual with the disability is working. There's an additional almost $13,000 that you can put into it, but it's very, very important that you understand that your ABLE account can never go over $100,000 or you will disqualify yourself from SSI and Medicaid. So that's the important thing. If you're not getting SSI and Medicaid, then it may not matter to you. And I think that the limits are about $400,000 that could be in an ABLE account. The ABLE account can pay for things that a special needs trust can't. For instance, rent, mortgage payments, monthly housing, right? An ABLE account can pay for, but if you're on government benefits, the special needs trust does not pay for that. So that's why, maybe a reason why you might want to have an ABLE account and a special needs trust. Also, you cannot leave life insurance proceeds to an ABLE account. It would have to go to a special needs trust. A special needs trust could distribute to an ABLE account, but you cannot make a beneficiary on your life insurance contract an ABLE account. So that is another reason why you might need both. Oftentimes people ask me, what is the best ABLE account out there? What do you think about the state of Texas, ABLE account? Texas was late to the party on the ABLE accounts. They're not wrong. There are ABLE accounts all across the United States. We have some definitive ones that we recommend, but basically an ABLE account is all organized under the 529A Act, but the white paper on how you can, move and navigate inside of your ABLE account and get distributions makes the difference on which one might be better for you and your family. I think I actually just talked about all of this. So the ABLE account, the only thing I missed here is that the ABLE account does have a Medicaid payback. Okay, so there's not a beneficiary on the ABLE account. The account owner is the beneficiary. So if your loved one dies and there's money left in the ABLE account, there will be a drawback or a clawback or a reimbursement to Medicaid. So that is one thing to keep in mind as you're funding your ABLE account. The other thing that comes up all the time is if I have a 529C, okay, can I convert the 529C to a 529A because I don't think my child's going to go to college, or quite honestly, I don't know if my child's going to go to college. The answer is yes. You can convert your 529C to a 529A, but you can only do $15,000 a year. So you might want to get going on that if your child's getting closer to 18. On your 529C, you can always change the beneficiary to another child that is going to go to college. That is one thing. And as long as distributions are not coming out of the 529C to the benefit of the child, You're actually the account owner. The parent or the grandparent is the account owner on a 529C. That is different on the 529A. So I just wanted to make that clear. We do get those questions all the time. Okay, so here what we have, I kind of hit on this a little bit already. The ABLE account can basically pay for housing and rent. Bottom line on the ABLE account is that it can be construed as achieving a better life for an individual with a disability. You can pay for it out of an ABLE account. It is not restrictive if it can be construed as achieving a better life for an individual with a disability. I did not mention to have an ABLE account, the disability had to start prior to age 26. So we've been talking about prior to age 22 this whole webinar, but for an ABLE account, the disability actually had to start prior to age 26. And here are some things that a special needs trust can pay for. A special needs trust can purchase a house outright. They just don't pay for, SSI is designed to pay for food and shelter. That's what it's designed for. So the ABLE account can pay additional food and shelter costs. The special needs trust is not supposed to pay that monthly debt service, but it can purchase a house outright. We have a question?
Yes, we have a question in the Q&A area. If I apply for disability, would it affect my daughter's disability?
If I apply for disability, will it affect my daughter's disability? Maybe, because she might get more. So it's not going to make it worse. I mean, she might get more. If you are approved for disability, and then you have a disabled child, then she would be entitled to 50% of your record. So she may switch over. If she's getting SSI right now, she could switch over. And in any of these one-offs, if you have like a unique situation that you want to chat about, you guys can catch me offline and kind of run some of these questions through.
You have your Allison information is in the chat box for more questions that you can have for her. And about they're asking about the recording. We are recording, and we are going to share that link, a YouTube link that Consolidated Planning Group have, and we later today we are going to email you guys the link with the recording.
For sure. We just want to encourage you guys to develop a future care plan now. It's going to answer some of these questions. That's what we're nuanced in. That's what we do. We do a lot of listening about what's important to you for the future of your loved one, and we can help again, develop the cost. What does that look like? How much is that going to cost? What do I need to do now? And the thing is taking action now. If you're going to work 5 more years, 10 more years, 15 more years, the sooner you take action, the more likely that you're going to be able to reach your goals from a retirement perspective, but as well as the long-term care needs of your loved one. If you got kids that are transitioning, consider touring care facilities for partial and full residential care soon. Some of these waiting lists are 5 years. So we have a lot of families that have, they want, housing, semi-independent housing for their loved one. Maybe it's a group home. Maybe it's a, place where they work and there's all kinds of really wonderful options out there. So I'm not telling you to institutionalize your child. I'm just saying every family's goals are different and what they want and how much independence they hope for. But the waiting lists are long, and they got longer with COVID, so definitely do that. And we want you to make careful considerations before naming a sibling as a future caregiver. We like a sibling to be the successor trustee of the trust that's going to fund the care for the loved one, so that way they can have that loving sibling relationship as opposed to an obligatory one. So we're, kind of to the end of our presentation today. And as always, if you've visited us before, I always have the things that should be on your special needs planning radar. You're going to get this again in the email, but you can take a picture of this. What have you done on the list? Do you know what the future care cost estimate? Have you done, a Social Security analysis? Do you know how and when to pull the trigger on your Social Security if you're thinking about disability, if you're thinking about, retirement? Do you need to check your beneficiary designations? Did you name your spouse as the beneficiary and your kids equally as the contingent? If you did, you're probably 90% of the people on this meeting today, okay? It's not wrong. It's the difference of a special needs advisor and a traditional financial advisor not giving you the right advice, okay? So it is very, very important to check those beneficiaries and those contingent beneficiaries so you can fix any mistakes that you may have made. It doesn't cost you anything to fix them, just your time and a phone call, request the form, and you can update those forms. So guardianship, I want to answer that question. I saw it earlier. There was a lady that asked about how do we know if our child if we need guardianship or not. We can refer to attorneys all across the state, and they're going to help you determine this. Again, there is a such thing as partial guardianship. There's healthcare power of attorney, supported decision-making in the state of Texas. And these attorneys are going to help you navigate this and help determine what is going to be the least restrictive, most appropriate option for your loved one. If their IQ is below 70, they're going to lean more towards that guardianship, partial guardianship discussion. So that is something to think about. We have entire presentations on our website, on our YouTube channel regarding guardianship and all of the different options and what you need to know. You can start that process 6 months in advance prior to your child turning 18. And if you need a referral, we're happy to make one. Just wanted to take a moment to say, meet my awesome team. I don't work alone. I am not singular in Consolidated Planning Group. So I have an awesome team when we work collaboratively together. So whether you get me or anybody else on my team, we are all working very hard for you and kind of working through and helping you navigate special needs for sure. So we talked about our YouTube channel, our Facebook page. Here's our contact information. If you would like to have a free consultation, please reach out. Our YouTube channel is chock full of many, many, many webinars on all topics special needs. So I hope you'll check that out. You can listen to them at your convenience, find ones that are convenient for you. I mentioned vocational rehab, Texas Workforce Commission, Texas Workforce Solutions multiple times. We got webinars on that, guardianship, special needs trust, ABLE accounts, letter of intent, anything that was basically on the items that should be on your radar. We have a webinar for that. So it has been my pleasure to be here with you today. Thank you for all your awesome questions. I think today marks a special day because we had many questions that I had never had before. So thanks for not being shy and putting them in there. And having said that, if we have any additional questions, I'm happy to take them and we'll wrap up.
Thank you so much, everybody, and see you in the next one soon. And today you are going to receive an email with all the presentation slides that Allison shared with us, and later on the recording. So thank you so much. Bye.
Thank you. Take care, everyone. Bye now.